I think that Canada will join suit, and I think they're going to join relatively quickly. They're kicking the tires around today, seeing where there could be agreement. But there are specific provisions in this NAFTA agreement which suggest that they were already negotiating for Canada, such as the sunset provision. So they're going to have to work out some dicey issues, but we do think that Canada will join. And then Congress will have to pass the bill. But if Canada doesn't join, that really kind of sets up a bunch of sticky issues. Does the old agreement that we had with Canada before NAFTA kick in, and what needs to get done before that? If that's the case, it wouldn't be so bad. But the president would probably have to initiate it, and he would be unlikely to initiate it if Canada walked away from the deal. The markets are basically waiting for that next step to see if Canada's there. I think the consensus is a 50-50 they will. We're much higher than that. We think there's about a 75% probability that they'll work out a deal with Canada and could do it relatively soon in the next week or two.
Why, Dan?
Well, first, the steel and aluminum tariffs will come off as soon as there's a deal. Second, there's a 16-year sunset for NAFTA. It was originally being talked about at 5 or 10 years, which was unacceptable. And third, which I think is most important, is that Trudeau's down in the polls. He can argue that he got a better deal from this and negotiated NAFTA ahead of his election next year.
Or that he was forced into it. We'll have to see how that gets spun. Let's move on to China, Dan. How much harder? I mean, is it a totally different ballpark when we consider the issues on the table and how far apart the two sides are?
I agree. And look, the market should not extrapolate Mexico and NAFTA with China. We're talking about structural reforms with China. China has tariff rates as high as 9–10% on their average goods. The U.S. is trying to bring those tariff rates down more in line with other developed countries like the United States and European Union. That's a very difficult move for China to make since they're trying to create jobs within China and think those lower tariffs will hurt them. And second, we're talking about intellectual property reforms, something that China is saying that they don't steal U.S. intellectual property. So we can't even agree on the facts. But overall, we think we're moving to an agreement. The market is starting to believe that there will be an agreement. There's pressure on the China economy starting to build it. The Chinese were here last week, and interestingly, the U.S. dollar has softened. The Chinese currency has strengthened since those discussions have taken place. So there's starting to be some movement. I think we're at the very early stages. And overall, I don't think we're going to have serious discussions until after the midterm election. These are very difficult issues to work out, and we may not even solve these China issues to 2019. Last point on this, which is critical. The market is giving Trump a very big leash on China. On NAFTA and European Union, they're totally fine with the way the systems work. If you reintroduce auto tariffs on European autos, I think the market will start to lose some of the trust that has been built up since July with the Trump administration. But as long as he's fighting with China and solving the European Union and NAFTA issues, the market will be okay with the direction that we're going in right now.
Hey, Dan, let's talk about the topic du jour, and that is social media. Google and the comments the president just doubled down on after tweeting this morning that, look, there's going to be an account that has to come to bear. What do you think happens with this? Is this for real, or is this just blowing off steam?
So first, the president is trying to put a spotlight on them. And it's very interesting, Becky, because last month the Federal Trade Commission initiated a review of the tech platforms, and it was like on page 16 in the newspaper. There's so many other issues out there, it really didn't get any attention. And so there is an active review going on. When Facebook testified on Cambridge Analytica, a lot of investors looked at that and said, oh, Congress isn't going to regulate them. The Federal Trade Commission is going to be the agency that regulates them. They're reviewing it, and their fact-finding will determine the level of regulation. But the president's making it very clear where he sees issues developing. This is not just a Republican issue. You have Bernie Sanders and Elizabeth Warren on the left talking about antitrust issues, corporate power issues, and talking about breaking these companies up into separate issues, separating YouTube from Google, separating Instagram from Facebook. And so it is a left-right populist combination, and we think there's just greater risk reward in other technology companies rather than the social media platforms, which are really up a lot over the last few years.